Welcome to my Morning Report analysis videos on Wednesday, 6th of February with me, Richard Perry, market analyst at Hantec Markets. We've got a rather risk negative look at markets today. There's been, just on the markets board really, the big mover is the Aussie dollar, actually, down 1.4%, 100 pips down, after RBA Governor Lowe sort of signalled that rate cuts were possibly on the table. That's sort of a shift in rhetoric, really, given the fact that previously he's always sort of been saying that probably the next move is going to be higher. Subsequently, that's really hit the Aussie today. So there's a little bit of a sort of filter through on the commodity currencies generally across the board, all pretty much weaker against the US dollar, and it's sort of a marginal risk negative look to markets generally, really, with the yen being a big yen being the outperformer of the day. A little bit of dollar strength generally, but we've had this the State of the Union address from President Trump last night. Nothing really doing in terms of any surprises, so the markets have pretty much looked past that. But it's interesting to see that S&P 500 futures were higher just at the turn of the European session, and it's just now ticking lower on futures, and that has sort of helped to drag these European markets back. Not too much. There were huge gains on European markets yesterday, so just unwinding that to a certain extent, and it's just a little bit of possibly a bit of an unwinding move that could produce a little bit of a buying opportunity maybe. These equity markets remain very strong. Look at that, S&P 500 continues to climb strongly in the recovery, and you were seeing that it's certainly helping European markets, or has helped European markets previously, just a little bit ticking lower today, but nothing too drastic quite yet. Now, in terms of data points today, again, not a great deal, and we've got the US trade balance. Sorry, that's a bit out. US trade balance at 130. Now, fingers crossed this happens. I can't guarantee it's going to happen. Obviously, the US data is a little bit sporadic still, but it's expected to improve slightly to $54 billion. Negative in terms of trade. Trade balance being negative. Now, also we've got the EIA inventories this afternoon, and that's expected to show weekly crude stocks again building, 2.2 million barrels. Distillates negative by 2 million, and gasoline mildly positive. It'll be interesting to see how that plays into the oil rally that has just been stalling, just ticking over a slight bit. So that's something to keep an eye on. And my analysis on the morning report shows that it's just beginning to sort of turn a little bit possibly corrective. So watch out for that. Okay, so that takes me to my chart today, which is Euro Canadian. Now, Euro Canadian is a chart that certainly looks Canadian dollar positive. However, I spoke about yesterday about the fact that the Canadian dollar has been pulling higher as the oil price has been rebounding. Now, a correction on the oil price, and there we see the Canadian dollar weaker today. Is this going to be a decisive move, though? Now, the interesting chart feature of the Euro Canadian are these Fibonacci levels. Fibonacci levels, which have previously on the retracements really been an interesting consolidation point and turning point, turning around at the 50% fib, and again seemingly in the last few days forming support at 76.4% fib. Now, trading above that and rallying would suggest that you're probably going to come back towards 61.8%, because that would be your retracement sort of target area, which is 50.98. So basically 151 figure area is 61.8% fib. Now, there is a resistance band between 50.40 up towards 51.50. So we've already seen 50.30 area. So there is a little bit of an overhead supply area, and a sort of acting as probably a sell zone between 50.40 and 51 figure I would be looking out for. And you can see that momentum indicators are still negatively configured, RSI sort of failing around sort of the 45 to 50 mark. MACD line is still negatively configured, as are stochastics, but any sort of rebounding move that starts to sort of consolidate is likely to be seen as a selling opportunity, and 51 figure is that consolidation point at the 61.8% fib. So this little rally that we've had today, I think, is not to be unexpected, certainly given the slight correction that we're seeing or slip back in oil. But how far will it go? Well, as I said, 61.8% fib seems like a likely target. So I wish you good luck in your trading today, and I'll speak to you later.